Let's talk about a stock that has just gone absolutely supersonic lately. Rail Vikas Nigam Ltd. You probably know it as RVNL. It's been on this incredible tear, and the big question is, why? Is this just a flash in the pan, or is there something really powerful happening under the surface? Today, we're going to break down the full anatomy of this massive breakout.
So here's the game plan. We're going to start with the breakout itself, what actually happened. Then, we'll dive into the chart to see what the technicals are telling us. After that, we'll get into the fundamentals, the real why behind the move. We'll peek out what's ahead, talk about the risks you got to consider, and then wrap it all up with what this means for both traders and long-term investors. We're going from the what all the way to the what's next.
All right, first things first. Let's talk about the moment that basically put RVNL on everybody's radar, that absolutely explosive surge in its price.
Just look at that. Over 21% in a single day. That's not just a good day at the office. That is the market making a huge statement. And the really important part, it happened on massive, and I mean massive, trading volume. That's your signal that the big money, the institutional players, were piling in.
But see, this wasn't just some random jump because of a news headline. No, this was a classic technical event that chart analysts live for. A major trendline breakout. Think of it as the stock finally breaking free from chains it's been in for a while. It's a huge signal that the whole mood around the stock has changed, and we're about to see exactly what that looks like.
So this all brings us to the million-dollar question, right? Why is this all happening right now? What is fueling this incredible fire under one of India's biggest railway players? Stick with me, because we are about to dig in and find those answers.
To really get a grip on this breakout, you have to listen to the story the chart is telling. This is where we get into the technical side of things.
So what even is a technical breakout? The best way to think about it is like a dam breaking. Imagine for months the stock price is water building up behind this wall, this resistance level. It's just building and building pressure. The breakout? That's the moment the dam finally cracks and all that pent-up buying energy just comes rushing out, creating a powerful new wave upwards.
And for RVNL, we're not talking about a small dam here. This stock was stuck, trapped in a downward slide for pretty much 6 months. So when it broke out, it didn't just hop over a little fence. It completely shattered a long-term negative pattern. That's a huge signal of a major reversal. Now, what makes this breakout so convincing is that it wasn't just one thing. It was like all the signals started flashing green at the same time. You had the RSI, which tracks momentum, screaming that buyers were taking control. We already talked about that monster volume spike, and on top of that, the stock had been building a really solid base for weeks, kind of like a spring coiling up. The moment it blasted past that 370 rupee mark, boom, all those signals fired at once, creating what traders call a really high probability setup.
This basically gives us a new roadmap for the stock. That old ceiling around 369 rupees, that's now the new floor, the support level. The next big test is that psychological hurdle at 400 rupees. If it can clear that, analysts are looking up towards the 430 to 450 range. And for traders, that line in the sand just below 360 becomes the critical get-out point to manage their risk.
Okay, so the chart looks fantastic. We get it. But a pretty chart alone isn't enough, right? We need to know why. What is the actual story behind the company that has investors so fired up all of a sudden? It all starts with this one absolutely staggering number, 90,000 crores. Now, that's not revenue or profit. That's the size of RVNL's order book. Think of it as the total value of all the work they already have lined up for the future. It is a monster. And this chart really puts that number into perspective. Their annual revenue is around 20,000 crores. That means their order book is more than 4 times what they make in a whole year. This gives the company an incredible amount of visibility into the future. They're not wondering where their next projects are coming from. They're booked solid for years. So what actually lit the fuse here? Well, it was a perfect storm of good news. You had a railway fare hike, tons of buzz about massive government spending in the upcoming budget, and just a general trend of money flowing into infrastructure stocks. And the cherry on top, a good old-fashioned short squeeze. All the people betting against the stock got crushed and were forced to buy shares back, which just added more fuel to the fire.
But this isn't just about a good week or a good month. A lot of this excitement is really about the long-term story. So let's shift gears and look at what could keep this growth engine running into 2026 and even further.
The big picture here is that India is going all in on infrastructure. Indian Railways is planning to spend huge amounts of money every year
and RVNL is sitting right in the sweet spot to benefit, especially in these hot areas like new metro lines and station makeovers. The company's also being smart, branching out into other areas. And maybe the best part is its asset-light model. It means they're super efficient, don't have a lot of debt, and generate really strong returns. And listen, there are two really important dates you should circle on your calendar. The next quarterly results in January will tell us if the performance is living up to all this hype. And then on February 1st, the union budget. Any big railway announcements there could be the next major catalyst for this stock.
All right, of course, no investment is a one-way street. It is so easy to get swept up in all the excitement, so now we have to hit the brakes, be realistic, and look at the other side of the coin, the potential risks. The very first thing that jumps out is the valuation, the price tag. RVNL is trading at a price-to-earnings ratio of about 57. Now, to give you some context, a close competitor, Irecon, is trading at a PE of around 35. That means RVNL is priced at a huge premium. The market has already priced in a ton of future growth.
And it's not just the PE ratio. Other valuation numbers are up there too. Beyond that, you've got real-world risks. If costs for stuff like steel and cement go up, that could squeeze their profits. And as we all know, big government projects can get bogged down with delays. The bottom line is, RVNL is basically priced for perfection. It needs to execute flawlessly to justify these levels.
Okay, so we've looked at the chart, we've looked at the business, and we've looked at the risks. How does this all come together? Let's break down what this actually means for different people in the market.
The approach is totally different depending on your timeline. If you're a short-term trader, this is all about riding the wave of momentum. You might look to get in around these levels, shoot for that next target zone of 450 to 470, but you'd have a very tight stop loss below 360 just in case things turn south. A long-term investor, though, is playing a different game. They're focused on the big story. They might actually wait for the price to dip, maybe below 350, to slowly build a position, aiming for a 500-plus target over the next year or two.
And that really leaves us with the final question, doesn't it? On one hand, you have a powerful breakout and a gigantic order book. On the other, you have a sky-high valuation. So, is RVNL a speeding train you need to jump on, or is it one you should just watch go by from the safety of the platform? The answer, as always, really depends on your own game plan and how much risk you're willing to take. Thanks for tuning in.